Good morning, everybody. This is Jack Gleason with Startuptrading.com. It is Wednesday, September 9th, 2020 for our economic news event at 10 a.m. A half an hour after the bell. We're going to have the Bank of Canada rate statement as well as the overnight rate. And then for the U.S. markets, we'll have JOLTS job openings. At 1:01, we'll have the 10-year bond auction. And then this evening, at the Great Britain pound, we'll have their house price balance. At the yen at 750, core machine orders. And at 9 o'clock, we're going to have the MI inflation expectations for the Australian dollar. In the overnight session, we have some news coming out of the European markets. Pull my mic a little closer. Out of the European markets, we're going to have their main refinancing rate tomorrow morning, as well as their monetary policy statement at 7:45 and an ECB press conference at 8:30. You can guarantee that is going to create some volatility. And then we're also going to have unemployment claims and PPI numbers for the U.S. markets tomorrow morning. So that's really it for the next 24 hours of news events. Well, I've titled this video Index Short Targets Hit, and I want to go over what exactly that means for these different markets. I'll start with the Russell here. And the Russell actually just came a little shy of its profit target. It was 1475. The Russell had this 50% retracement short from what was Wednesday's high of last week to the low of Thursday. Now we completed those negative 61s, and if you can see where that negative 61 is, it's right at 1497. That was very close to the low of Friday, and it was actually the low that we got bid off of yesterday morning. Then the Russell had that relative strength. Now we also had the 50% retracement just from that Wednesday high to what was the Friday low act as a resistance level going into Tuesday, and that is where we get that 1475 profit target. Now the Russell has been weak for some time, and I'm just going to back out here to this higher time frame. What we ran into, and just so this 1479, anytime you see a dotted white line, this is the startup trading indicators. The startup trading indicators is a product that I created. The white line is the beginning of a move, and then we have orange dots. So I draw the lines, but you can see there'll be a white dot at the beginning of a move. There'll be an orange dot at the swing high and a purple dot at a swing low. So I draw the dotted lines of the corresponding color on the daily chart, and you can see we ran right into what I would call the leg start of that move, as well as the completion of the shorts. And this pattern has basically happened in every one of the indexes. So after that was there was AstraZeneca, their vaccine that apparently had adverse effects. Surprise, surprise. And they have completely discontinued the creation of their coronavirus vaccine. But we had that 50% retracement long complete profit targets, and our next measured move here, which would just be from that swing low right at the European session. The European traders always get great entries to the overnight high, traded in a front run. Our upside targets are 1575. We could rally all the way up into just what have we seen this entire time. It's just that Wednesday high to low. So I wouldn't expect really any resistance to come into play. And at this point in time, I would still want to validate this. We have no resistance for 17 points, and that's at 1537 there in the Russell. Moving on to the S&P 500, very similar price pattern. Now, we had an extension short in the S&P 500, and that extension short had a downside target of 32.9975. That was in yesterday's morning trade plan. Well, guess what the low is in the overnight session? Right there. It's a 32.95 half. Now, when we come off of these profit targets, it is completely normal, especially, all outside of the last 3 days, there's been aggressive selling, but we've been straight up before these 3 days. So for us to rally all the way back up into that same anchor new low, which takes the S&P 500 at 34.23, which is pretty high. We could easily do that today as we trade back through and really watch Perry's levels. But as soon as we start getting back through the resistance levels that we saw yesterday, which is right where we're going to open, it's going to be a short squeeze right up in, and I believe there's a gap up there. Let me just get rid of the extended session here. Yeah, there is going to be, and I'm not using the price data from Monday because it was a holiday, but there will be a gap from last Friday right at that level 34.26. So if we have some strength off the open, that is where I'm expecting the market to come back into. Now, after we completed our profit targets off the overnight open, on the AstraZeneca news, we had a full 50% retracement long trade right around the European Open. And then once that full 50% retracement long traded, we've actually gone through our profit targets. Now we're making a new high. We never got this halfway back pullback. We are going to have an extension here. We are going to have an extension. You could even argue there's participation. So if you want to get into this trend, you're going to need to pull a high to high from 33.54 to high. Okay, because this is going to be aggressive through here off the open. The deeper pullback is going to be the traditional from the European Open to high. Moving on to the Dow. The Dow probably had the cleanest technical move out of the entire market here. So we had the full 50% retracement, very technical. What was Thursday's high to Friday's low, traded 50% retracement on Tuesday, right at the European Open. Once again, those European traders just get some of the best entries. And rolled all the way down, completed profit targets yesterday. Completed profit targets, we had a reversal, there was a leg start, there was a swing mark, see this purple dot. When you get a purple dot followed up by a white dot, that's usually a pretty aggressive reversal to the on the downside. And you can look at like all of these, that's why I love these indicators. You got a orange dot, the orange dot's on the high, the purple dot's on the low. So orange dot, white dot, sell off. Once again here, orange dot, white dot, sell off. So when you see that, that's usually the beginning of a bigger move in a reversal because it's a swing low and a leg start. And if I see those within 2 bars of each other, for me, it's often a sign of a very aggressive move. Anyway, we have come off of this 50% retracement long, and then once again, kind of similar to the S&P, this next traditional has really been aggressively front run. Now I will draw it up, but we are most likely going to go into extensions here. In the Dow, we're going to go into extensions in the S&P 500, and that'll be from the anchor before 2 a.m., the high before 2 a.m. to high. And as far as where I think the Dow could go, the only thing I look at is again the full 50% retracement short, and that's all the way up at 28,183. I would not draw this next measured move. We're going to open right here, and we're just going to blow right through it. It's not going to have participation. Moving on to the NASDAQ. Now, the NASDAQ really got hammered. What do we go down over? Let me actually look at the percentage change from the high to low there. So from Wednesday to Wednesday, we were down 12. Wow, I'm like looking at that number going, is that real? 12. It was a 12% move, a 12% pullback in a week in the NASDAQ. I'm actually just realizing how incredibly aggressive that is. That's pretty amazing. Futures high to futures low, 12% move. Now, the NASDAQ, similar to the S&P, had a extension sequence. Now, that extension sequence came just shy of targets. Our targets were down at 10,883, and we were about 50 points away from completing that. However, we did get the reversal with the rest of the markets here. Now, I will take that same anchor to the new low just because, 12% move, that is fairly aggressive. And just be aware of where that 50% retracement is. And this lines up with the lows before the breakdown on Friday. There was some resistance there on Friday. It's the overnight highs on Tuesday. So just, generally speaking, that 11,600 resistance level. Now, I'm not going to really be looking for the extension that I'm looking for in the Dow and the ES here. We had a traditional run to target, and then that next traditional, that's an 11,175 front run so far by 12 points. But I will continue to respect that level, and if we come back into it, I will treat it as support. As a reminder, yesterday, what I was paying attention to, guys, is this 11,114. This is a weekly extension. That's a massive level. And these massive levels, this is the high of 2020 to high. These trade maybe once a year. But the profit target on this, we can absolutely continue this incredible run. Just because we have 3 days down does not necessarily mean that's the end of the bull run here, guys. The profit targets from this swing level here in the NQ are 13,103. 13,103 on this pullback, and I mentioned this yesterday in the trade room how important this is. Now, we had the accumulation in a first test off the open. There was more buys going off, but into the close they sold it. There was that underwater close Perry mentioned. We're back above those levels that acted as support. This 11,058 half, this dotted line is straight from the startup trading indicators that lined up with our 50%. But there's a heck of a lot of support here in the NQ. I doubt we get more pressure below that 11,114. And as I mentioned, that's the swing entry level for like a 2,000 point target. So pretty significant. Moving on to oil. Now, oil will probably bottom with the markets here as well. Let's just back out to this daily chart. Now, I wanted to see this extension trade from what is May 7th high, the 50% retracement. Right now, we're just got below that 38.2. And actually, if I look at this, we came right into this daily leg start. And we don't have to trade that 50, right? We have broken the most aggressive trend here. This is a really important day here for the indexes, but really for oil. Oil is well off of its highs. Its highs are a profit target. From that futures high to that futures low, the percentage change is 17.5%. So we're down 17.5% in oil in roughly 2 weeks. Now, we had the low to low from what was Sunday night low to low as a resistance level. We technically pierced that 61. So I'm going to delete that draw. There is a valid, and if we could get the 78% retracement, just because we barely, this is where it gets, okay, this is where it can get confusing because we broke the more aggressive extension, but we immediately ran into the previous extension behind it, which was the extension that traded Sunday night to target. So what I like to see is I would love to see 36.46 trade. Just this zone, this previous low test. If we could come off that previous low test, tomorrow's going to be the oil inventory report. They're pushing it back a day because of the holiday. If we can come down here, just anywhere between the 61.8 to this 78.6, and it's a 36.73 to a 36.46. 36.46 being my optimal entry level. I would really expect us to make a kind of a double bottom pattern here, or anticipate that being a potential, and rotate right back and begin the next leg up for an oil. Now, if we do continue lower and this extension is in play, which we've come off very technically off its 38.2, the downside target is still this 35.26. 35.16 is actually the negative 23. 35.26 is the daily extension 50% retracement long, and that is a very important level for me here in CL. So I do think CL is really interesting here. So don't just keep your eyes focused on the indexes, because oil has some really good setups too. Moving on to the USDJPY, we had this full halfway back long that I've been mentioning at 105.87. It was in yesterday's trade plan. Now we traded it once, we rotated higher, we traded it twice, we rotated higher, and then our final low came on the third test, 230. Guess what happens at 2:30? European markets open. We rotate all the way back. Upside targets are a 108.86, but opposing that, we do still need to get above the full 50% retracement short, which is definitely a valid resistance level. And you can see we're right there. So what I like to see for the USDJPY for a long entry is move above, 106.34, and then a next traditional long. Moving on to the Aussie dollar, which pierced to 61.8, but is just completely rotated higher. And that, anytime we break right at that open at 6 o'clock, I'm always a little tempted to call it, an actual trend change break. I've seen oftentimes we just tag that 61. There's no volume traded there. There's only stops that are getting hit. And then we rotate the other way. So I'm paying attention to two different things. One is going to be the halfway back along from today's low to high. That's a 72.31, and the other is the full 50% retracement short from the highs of last week. It's 73.02. So two different options there. Moving on to the euro. The euro here on the daily chart is most definitely inside of this uptrend. Now, we have this extension here that I would like to confirm. If we get down my same level yesterday, 117.16, 117.16 is an actionable excuse me, actionable level for me. The other level I'd like to watch and pay attention to is this 118.84 to like a 118.90. But if we break above this 118.27, I do believe that there'll be a pullback to buy up into the 118.84. So right now, the only actionable levels as we're currently trading, unless we get higher than pull back, are 118.84 to 118.90, and then the 117.16 support levels. Moving on to, this is the VIX. Well, I'll just go over the VIX and then the pound. But basically, this VIX setup here, we had a 50% retracement short hold yesterday and in the overnight session as the indexes made their new lows. Here was the kicker. No new high in the VIX. If we were really going lower off that AstraZeneca news, the VIX would have been through Tuesday's high. What did it come into? A 50% retracement short. Okay, that's why you always want to watch the VIX. Negative 23% profit target is going to be a 28.45 here. We're probably going to rally until we complete that 28.45, and even then we'll have our next traditional setup there in the VIX. So I'm just going to set an alert at that 28.45 and then go to the Great Britain Pound USD. The GBPUSD, well, we had an extension yesterday. That completed targets. We blew through targets. We had one extension, two. This third one is officially broken, and it's broken in a pretty aggressive front run of a major support level. But we have broken this extension, so there is the possibility of a trend reversal here in the Great Britain Pound USD. We have run into higher time frame support, and we have reverse trend. Yeah, the only thing I would look at for resistance is a full 50% retracement short for the week at a 130.70. That's from the Sunday night open to low, 130.71. And then the USDCAD, which has an economic news event here half an hour after the bell. Two major levels I'm watching. There is an aggressive extension here from what is the Sunday high to high. I'm not really interested in it, but it's a 131.87. Otherwise, full halfway back long, 131.27, and then a major short at 133.55. But we very well could react off this extension, but I'm just going to be an observer. If we confirm it by breaking out of the shorts, I'll take the next pullback, but other than that, I am just going to look at the 131.27. And then moving on to gold, which yesterday both gold and silver had their trend breaks. As I mentioned in the room, what we were looking for was, for us to break above the 50% retracement short from what was the high of the week to the low of the week. Now that happened. After that happened, we set up in a 50% retracement long. Now this long does target the halfway back from last week's high on Tuesday. We also have right there the high of what was Thursday, the high of Friday. We have the profit target of the long setup. So there's literally two daily highs, a profit target from a long, and a full 50% retracement short. It's almost too good to be true, but that is absolutely going to be a heavy resistance level at 1956, 6 points above where we're currently trading. Very interesting level to trade here today. And then moving on to silver, which if you look at the higher time frame, I've been saying this for a while, it is more bullish than gold. What we did is we rolled over into the December contract here in silver, and that happened here, okay? That happened going back to the 26th of August. When futures roll over, especially in metals, oftentimes you will reach a support level, because what happens is anybody who's long the previous contract and they have to exit their position when the contract rolls over, well, guess what? They're no longer long. They've exited the position. So all of the people who bought the silver contract at 26.09, 50% retracement during the last contract, need to get out of the contract and they need to get back into it. Where do they get back into it? The same place they did on the previous contract. That's what we ran into yesterday. We broke shorts and we stuck a to the tick. Okay, this is probably an important note here. When you have a 50% retracement daily trade, we break trend and immediately tick the next hourly, it's usually the beginning of something bigger. So I'll finish that off with that note. If you enjoyed this content, guys, please give this video a thumbs up for me. Feel free to share it with anybody who you might think will find it useful for their technical analysis. If you are interested in joining the Startup Trading, click the link below. If you have any questions, shoot me an email, contact@startuptrading.com. And if you're interested in those startup trading indicators, I just updated them. You can hit me up about that as well. Everybody trade safe. Have a wonderful day. I'll catch my trade room members in the trade room, and let's make the best of it. Take care.